The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 3rd. How about that, folks? It's already June. June 3rd, magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So I hope you had a great weekend out there. Let's go take a look at one of our tools. This is the tool I call the shadow of ignorance is fear. You know, fear is one of the greatest challenges that each of us face. Fear, it holds us back from the fullest expression of ourselves. Fear prevents us from loving ourselves and others. Fear, folks, can lock us up inside an invisible prison. Yet, fear may also have some uses that can actually serve us. You know, some fear may be helpful, such as an instinctive awareness of danger, and of course, without fear of consequences in risky situations, well, let's say such as trading and investing, we might rush in where angels fear to tread. So fear is really a question. Think of it like this. What is it that you are afraid of? And more importantly, why? What is it that you're afraid of and why? Write it down on a piece of paper. Write down all of your fears, and most importantly, why? Because, you see, our fears are actually a treasure trove of self-knowledge as long as we sit down to explore them. And there is no better way to explore them than to actually put them down on paper. You know, Cicero, he once said this. He said, "No power is strong enough to be lasting if it labors under the weight of fear." Think about that. No power, doesn't matter how strong, no power, how strong, is going to be lasting, folks, if it's going to labor under that weight of fear out there. You know, maybe you're familiar with the expression, what you don't know won't hurt you, or ignorance is bliss. Well, folks, that is all BS. That's all before Steve, because I'm here to say nothing could be farther from the truth. Ignorance is not bliss. It causes fear. It causes confusion. The shadow, folks, the shadow of ignorance is fear. You know, on January 6, 1941, Franklin Delano Roosevelt, in his message to Congress, he wrote the following. He said, "We look forward to a world founded upon 4 essential human freedoms. The first freedom is the freedom of speech and expression everywhere in the world. The second is the freedom of every person to worship God in his own way everywhere in the world. The third is the freedom from want everywhere in the world. And number 4, he said, the freedom from fear anywhere in the world." I'd like to just simply leave you with this thought for the day as we begin our trading session, and that's this. An optimist, folks, an optimist interprets life in the most favorable way possible and trusts that the best can happen, while the pessimist fears misfortunes, and therefore, you know what will happen? The pessimist will actually attract those into their lives. When it comes to your fears, become an optimist, because there is always much to learn, regardless of how much it is we already know. Work wonders from within, folks. So let's go check out these markets. You know, the close of Friday certainly should have some fear out there. We had the Dow off, a couple hundred points. The S&P was down 24 points, 1.5%. The NASDAQ was off 35 points. We've got the New York Stock Exchange was down 157 points. That actually gave a signal, a reversal trend in the marketplace. The 6-month seasonal selling cycle, well, that is in full gear. If we take a look at what we did here in the United States, we handed the ball off to Asia last night. Well, we handed that ball off. You had the Nikkei, you know, who's been pumping and dumping all kinds of yen into their into their environment here. You had the Nikkei down 513 points off another 3.7%. In about 7-8 trading sessions, we'll go look 7, 8, 9 trading sessions, the Nikkei is off 17% from its highs out there. It doesn't take long to take back that which the market has given you. You had the Hang Seng off 100 points last night. That was about 0.5%. You had the Shanghai down, it was flat. We'll call it flat. It was off about 1.5 points. Over in Germany right now, the DAX is up 11. The FTSE is down 29. And our futures here are bouncing. Now, could you have expected our futures to bounce? Absolutely. Absolutely. We had a VIX reading percentage-wise. I think it was a 12.16 or 12.6, something like that. We had a day where we exceeded 10% from the prior day, a change. And when you see that, folks, 60% of the time out there, you are going to see a bounce in the marketplace. 60% of the time, you're going to see a higher close than the prior session out there. That's all that we really have that is going on inside the marketplace. We've got that normal work-off of an oversold situation. Let's start off by taking a look at our 30-minute chart, our EKG of the markets out here. We're looking at take a look at this big swoosh down here at 4 o'clock. Coming to that 4 o'clock close. If you are watching us on Tiger TV, you see this big long-ranging candle right here, wide-ranging bar. If you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can always get the live stream of this show by going to the homepage of TFNN.com. Over on the right-hand side, you'll see the button with 3 little smartphone devices. Click on that. This show will stream live. We're taking a look here at the 30-minute futures contract for the S&P 500. We can see that as the market was moving down into the close on Friday, we saw the market getting down into that oversold territory. And then at the open here last night, you had a nice little bullish engulfing candle. As the futures came online, if we take a look at any other bullish candlesticks out here, you had this little morning star reversal signal. That's that 3-candle signal out here between the sessions of 4:30 a.m., that little wide, or not wide-ranging bar, but the down bar here. You then had a little smaller up move here, which was just below the close of that 4:30 session. That's the 5 a.m. session we're talking about. And 6 o'clock here, 6 o'clock session, or 5:30 session, I should say, went ahead and overtook this entire bar from the downside at 4:30 this morning. This here is a morning star. So the bulls here are really hanging out. They're trying to protect the area of 1626.54. We can see in really moving sideways to slightly up, coming in at 7:30 this morning. What we saw here was really what was to be expected. That was your dead cat bounce. If we come off of the swing point high from 11:30 in the morning, this is on Friday, this price point is 16.58, all the way down to the low of the trading session here coming into Friday. You'll see that a 0.382 retracement, a dead cat bounce of just simply that leg down, that number would be 1638.50. What did the ES Mini actually do here at 7:30 this morning? Well, the high that it made was 1638.50 out there. How about that? That's where you let some folks off of the elevators. And then what happened here, or the elevator, I should say, on the way up, and we even had the bears show up. You had this little bearish engulfing candle. So we know the bears are certainly lurking out there. They're just trying to go ahead and pull folks in. They're just pulling them in. They're saying, how much higher should we let price go this morning? I say the more likely look is that we see a move up to about the 1645 range. You could even pull it up to 1651, but one level at a time. What's that 1645-ish? Well, that's your 0.618 retracement. You know that is just a normal move inside any market, is moving in that 0.618 area. Maybe what the market here, the ES Mini, is going to do is just set up another Gartley sell pattern. Well, how would it do that? Well, it would do that easily by just simply forming an A to B equals CD pattern. Let's take a look at a possible small one out here that would take us in there. Right now, if the low came in here at 9 o'clock this morning, the 1 to 1.272 A to B equals CD takes you about the 1647 level. So between 1645 to 1650 is where I would suspect that the market, if there's any kind of energy left here in this market, where you would see the ES Mini move to. Now, if it gets up there, all that it would be doing is setting up your next Gartley sell pattern. We'll go in here. We'll go ahead and draw what that would actually look like. So in advance, we know what it is that we would be looking for out here. Now, the cool thing, if you're watching us on Tiger TV, I'll get rid of that little formation tool here right now. Give me a moment just to move that out. You can see that the expansion, that's assuming that the low was put in here at about 1632 as we came in that 9 o'clock session. And you can also see that's only about a 0.54 retracement. So it does have a little bit room to move further back. That further back would take you into that 618 level. So right around 1631. Regardless, we'll just go ahead and leave this in play here. What we can see is you've got about a 2.22 expansion of your B to C swing point out there. Well, you know, a beautiful Fibonacci number would be 2.618. We can actually measure that ahead of time here, and as we try to do that, 2.618, that would take you right up to about the 1648 level. So what we know here is we know if we're just simply out here, you know, going fishing, looking for the next possible place to put on a move out here, take a look at what also would happen as you get into that 1645-ish level, 1646, really where the downdraft on Friday began, which was right at about 3 o'clock in the afternoon out there. So all of this making sense, and we've seen a number of Gartley sell patterns. In fact, that's what we have seen coming off of the highs out here that were generated back on May 22nd, right around the 11 a.m. time frame, as the ES Mini made its high at 1685.50. We have seen two Gartley sell patterns that have worked very well. The question is, three's a charm out here. So that's what I expect that we'll see in the marketplace. Now, if the market can only do this dead cat bounce, this 0.382 retracement, because it has worked off its oversold condition here, that is very bearish. What would that next move be? Well, we just take a look at the A to B equals CD down. We'd start from that leg high out here at 11:30 on Friday morning, out at 1658. That would be your A point. Your B point would be the low, coming in at 4:15 in the evening on Friday. That's your 1626 and a quarter. Your C point now just being that dead cat bounce. Well, the 1-to-1 would take you down into the price level of 1606.62 out there. That would also give you a 1 to 1.272 A to B equals CD down, excuse me here as I pull this back, off of the actual swing point high from May 22nd out there. That would be your A point. Your B point would be that hammer candle that formed at 10:30 in the morning on May the 24th. Your C point was where that Gartley sell pattern completed, and that was at about 11:30 in the morning on May 28th, out of that price level of 1668.50. So you can see here you've got two A to B equals CD down patterns that would complete right around 1607. So if all that we've seen is a dead cat bounce, that's where the ES Mini will head to. Right now, if we take a look at things that are moving and grooving in the marketplace here, you've got Merck, MRK. They closed at 46.70. They're having a nice bounce this morning. They're trading out at 48.78 in the pre-market. Apple, which closed out at 449.74. Their last trade just fired off at 451. That's to the upside. To the downside, you've got Infinity Pharmaceuticals, INFI. They closed at 26.95. They're getting a little haircut this morning. Last trade firing off at 22.71. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Out with earnings before the bell this morning. We have Cracker Barrel, CBRL is their ticker symbol. They're trading up about 5% here this morning. We'll take a look at that chart here in a few moments. We're going to first start off, so I mentioned a change in trend. Well, we definitely saw a change in trend take place on Friday with that close. Now, that means that 6-month unfavorable seasonal cycle, we're in it. We're in it no matter what, because that lasts between April 30th or May 1st and October 31st. So we're inside that unfavorable seasonal cycle. What we've now received here is all of the signals that the market is going to go ahead and pull back. How long is that pullback going to last? Well, right down this date. How about July 4th, July 5th, July 3rd? Right around there when, we're ready to shoot off some fireworks. That's probably the next time to step back into this market here from the long side. So we're going to get that pullback inside the market. How deep it'll go? Well, we'll take a look at the 200-day exponential moving averages. That's really going to be one of our first targets out here. But we're going to first start off by taking a look at that most important currency pair chart out here. It's not the queen, it's not the euro, it's not the king, it's not the U.S. dollar index. It is the euro-Japanese yen out here. That euro-Japanese yen chart, this is the one that is tracking the S&P 500 better than any other currency pair out here. If you're watching us on Tiger TV, the black line that you see on my screen, that happens to be the S&P 500. The chart that we're actually looking at is the euro Japanese yen. Now, what this has also done, it has formed two butterfly sell patterns. It formed a 1.618 butterfly sell pattern. That would be coming off of this swing point right here, the swing point high, which is on February the 6th. If you take that high, which is 127.69, all the way down to the swing point low that was formed on February 25th out at 118.70, then that is really your expansion. Your expansion of those two swing points, that'll take you up into about the 133.43 level. That is what the high has been thus far. May 22nd actually got up to 133.78. That was your first. That was your 1.618 butterfly. We have a smaller butterfly that took place here starting on April 11th. If you use that swing point high of 131.109 all the way down to the low that came in on April 16th out at 124.94, 95 we'll call it. If you were to measure that, if you were to take an expansion of that difference and add it to the bottom, add it to the 124.95 level, that'd take you right up to about 132.73. You can see the patterns on my screen. We've got one colored in yellow, one in light blue. Those are reversal candles out there. Now what we're seeing here is we are seeing the euro Japanese yen continue to move lower out here. That is important because that is a signal, because the currency market is what is going to always tip its cards first out there. So you want to make sure that you're paying attention to this currency pair. Not that you don't want to pay attention to the U.S. dollar index, but that's the basket of currencies. That's the one that really has a better impact or a signal impact on what's going on inside commodities, such as gold, silver, light sweet crude, and so forth. So we've got the currency pair. That is moving lower. You say, where could this move to? Well, you know, if you just simply take a look at that dead cat bounce coming off of that larger butterfly area, coming off of the low of February 25th out there at 118.70, all the way up to the high that was put in on May 22nd, you know, the dead cat bounce area right around 128 even or so. That's where I suspect is going to be the first level that we'll see this currency pair head to. If we go take a look at the retracement levels coming off of the smaller butterfly sell pattern, let's go see if we can find a couple things that really tie into each other, and we can. What we can see here is at about 128.33, that's your 0.618 retracement. That's of the smaller pattern. You can see right now that this morning here and last night in this morning's trading, we've dipped below that 0.382 level, which is 130.41. So the 0.618 retracement of the smaller pattern, that moves you into about 128.32. Well, the dead cat bounce of the larger pattern takes you into 128.02. So it's at that area where the euro Japanese yen should find some pretty decent support, see a little bit of bouncing. Remember, this is a market here where the bulls have been rewarded each time in buying the dips. I suggest to you this. The trend of the market has changed. What you want to be looking for is you want to be able to now sell any of those bullish moves, any of those rises higher. The trend has changed. It's going to be like this for the next 5 to 6 weeks out there, and you want to be able to take advantage of it. Watch this currency pair. Add this to your arsenal of trading tools out there, because it will help to guide the way as things are coming. I guess when we get back from this first break here, the market will open. I do want to take a look at Cracker Barrel. I love that good old country ham out there. And their revenues, let's see, do I see the revenues on my screen here? Looks like they posted operating income of $44 million versus $39 million from the year before. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 65 points, trading out at 15,182. S&P up about 2.5, trading at 1633. Composite up 5, trading at 3460. Russell 2000 up 2.5 points, trading out at 986. Google off $8.70 right now. Apple up $1.25. Microsoft up 5 ticks. Intel up 96 cents out here. That's up 4% this morning. We'll have to peek in on Intel, see what's going on there. Cisco up another 1% this morning. That is up 29 ticks right now. Leading the charge to the upside, Clovis Oncology, CLVS, up 79%. What the heck did they cure out here? Must have been cancer. Let's see here. They demonstrated encouraging results. Well, we'll take a look at that stock chart, up 81% here this morning. American Safety Industries, ASI, up 20% this morning. That's up $5. Let's see. They are going to acquire Fairfax Financial is going to go ahead and acquire them. That's what's in that. SodaStream out here. What is that doing on my green charts? Number 3 out there. They're up 7% this morning, up $4 and change. Infosys, INFY, up $2.70. Merck up $2.25. You've got Rio Tinto, RIO is up 3% here this morning. Bristol Myers Squibb, BMY, they're up 2.5% this morning. Dollar Tree, DLTR, That's up 2.5%. I believe Dollar General out with numbers either after the bell or before the bell tomorrow morning. To the downside, we've got Google leading the charge off $6.80 right now. Infinity Pharmaceuticals off $4.80. You've got Biogen, BIIB, off $4 right now. Stratasys, one of the 3D companies out there, they're off nearly $4. F5 Networks off $4. Tesla Motors off $3.70 out there. LinkedIn off $1.58. LinkedIn has that island reversal top out there. Amazon off $1.70. Our calling number is 877-927-6648. Let's go. Let's start up. Excuse me. Let's start off here by taking a look at Cracker Barrel. Right now trading up $96, gapping up again here this morning. When I say again, the last gap came out here on February 26th. Big volume behind this move. Now, remember, when I say big volume, you got to take this into perspective. If you're looking at the charts out here, this traded 1.2 million shares on February 26th out there as it gapped up, got to a high, of 75.45. You can see the gap left from the prior session. That gap is open. The high of that February 25th area, 68.19. We see another gap here this morning volume-wise. So far, not too bad, 71,000 shares. That's after making a high with 213,000 shares on Friday. So you say, Steve-O, where is this thing headed to? Let's go take a look at the weekly chart out here for Cracker Barrel. As we take a look at the weekly chart, how about that? I thought I had a different chart out here. Let me see if it was the monthly chart, actually, that I was looking at. It was not. Well, let's look at the monthly chart anyways. How about this, folks, for a hammer candle low back here on November 30th, 2008. That's we're looking at the monthly chart. Your 8 point's going to be the low of that, $10.67. You like to certainly see that at lows out there, or when you're buying, you'd like to have that hammer at your back, and that's exactly what Cracker Barrel gave you on the monthly chart. So that's your A point of an A to B equals CD. That price again, $10.67. Take a look at where it was trading that month, down at the bottom of that oversold condition, by just simply using that relative strength indicator. Your B point on this is going to be the swing point that completed November 30th, 2010 out at 57.79 out there. Your retracement, we'll go measure that retracement here on the monthly chart. We'll see that that's just simply nothing more than a dead cat bounce out here. A dead cat bounce, 39.79 was the exact .382 retracement. What it actually got down to was a low of 37.31 out there, and you can see as it was doing that, running into that green squiggly line on my screen, that's your 200-period exponential moving average out there. So only does a .382. Says it's going to do more than a 1-to-1 A to B equals CD. On the monthly chart, you can see here, no bears in sign in this equity ever since the last time we saw any bears was during October of 2012 out here. So what has this done? Well, it's gapped up. Obviously, we've just begun the month here of June, but gapping up into that 1.272 A to B equals CD. 97.12 is the exact number out here. So far, the high today is 97.24. So it has completed that portion. We can see that price here traveling. It's actually stronger along this B to C move, meaning coming off of the C to D move, coming off of the September 2011 lows versus coming off of the November 2008 lows. A stronger move here. Stronger move tells us that, hey, maybe Cracker Barrel actually wants to move all the way up to 113.48 out there, but it's completed its next target, 97.24, and it's done it in nice fashion with a gap up today. If that gap holds, if we see some volume in it, Cracker Barrel should continue to move higher out there. Let's go take a look at Clovis Oncology, CLVS. Let's go see what that is trading into. CLVS is the ticker symbol. So as we take a look here at Clovis, boy, take a look at that little wide-ranging bar out here. Go ahead and fill in the gap as well. So as we take a little, how about, this is interesting. This is a equity that came out. Their IPO looks like was November 16th, 2011, a low of $12.29, a high of $13.39 out here. Had a big high-volume downdraft, well, a couple of them. The last one was November the 12th with about 3.2 million shares to the downside. It's a daily chart. It's at all-time highs out here. This thing this morning already up with 383,000 shares in only 10 minutes of trading out here. So where this is going to go to, no clue. But can't suggest you jumping in on this. You'd like to see this thing come back and actually test these lows out here. Don't know if that'll happen. That's that November 12th area where it gapped down with 3.5 million shares out here. Maybe it'll come back and test the gap on this thing, which would be left from Friday's session, which is right around 37.10. In any event, they are rocking this morning. Let's go out to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you this morning?
Yes, okay. Could you take a look at the Aussie dollar? I just wanted to take on it.
Yeah, sure, I most certainly can. So give me a moment here. We're taking a look at the Australian dollar versus the U.S. right now, trading out at 96.45. And tell me what you're doing here, what you're trying to do, and how I can help you.
Don't know whether to get in short or long.
To get in short or long. Okay. So as we take a look at the Aussie dollar here, in my opinion, at this stage, you don't want to necessarily get in short here just yet because the relative strength indicator, relative weakness indicator, it'll work on currencies, commodities, and the whole bit. And so the idea here in utilizing this is you want to be trying to sell from strength. And right now, what we've seen inside the Aussie dollar, again, I'm using AUD/USD. So I don't know what you're comparing here, but if you're taking a look at going short here, which was this, I would think you're looking at on this currency pair here, you would want to wait for some type of bounce. Now, that doesn't mean that I would take a long position here either, because I have not seen any bulls as we take a look at this stock chart here. But it is in very much in a oversold condition. It's been like that really for the last half of a month, last couple of weeks out here. Hasn't given you any real kind of bounce to the upside. I've seen a couple of continuation patterns to the downside out here right now. Today, you're just trading inside the body of the candle from Friday out here. So I don't see necessarily the benefit here in trying to jump onto a short position. If I pull this thing back, Lou, I think you're watching this on Tiger TV, and I just simply put a support line across my screen out here, we can see that support, this thing is traveling into the lows that should be support that goes all the way back, kind of like a consolidation range. It takes you back to September of 2010. So really we'll need to bust out those lows, and the real low out here that it's going to have to bust to give you that change in polarity, an indication that this thing really wants to break out to the downside is going to be close below October 4th, 2011, and that's going to be at the price point of 0.9386 out here. So this thing has really been in quite a consolidation range out here. I would wait to sell this thing on the next bounce. Where would that next bounce potentially take us to? Let's say that, but I wouldn't play this on the long side because everything right now shows moves to the downside. I would have to wait for some type of real bullish candlestick out here before I would take a look at possibly even playing the long side. So this should bounce at least to the 99.993, maybe to 1.017 out here, which would be your 0.618 level. But I don't see a trade in this thing, at least in taking a look at the daily charts. Are you looking? What's your time frame? I suppose that you're trying to trade this on.
Right.
Yeah. So, and anyway, I don't see the trade here in the Aussie, at least on the daily chart. On an intraday chart, again, I would still wait for more information before I would do anything on this trade here.
And what do you think of natural gas?
Natural gas. I like natural gas, but let's go take a look at nat gas out here. I'll pull up the continuous contract on my screen here right now. Natural gas is trading out at $4 and almost $4 even. Are you looking to go long natural gas? Short?
Long, yes, long.
Trying to go long here. So if we take a look at it, I would. Let's see. If we take Lou, let me just erase a couple things from my screen here. So it had a real nice butterfly sell pattern that completed. It completed either April the 18th. It came back and tested with a shooting star on May Day, on May 1st out here. So if we take a look at the normal retracement of that pattern, that would say the dead cat area is right around $3.91. It's trading off of its low out here. If you're looking for a long position, you could take a stab right around there, right around 390. If it breaks that area, I can also see the A to B equals CD down pattern in this. And the A to B equals CD down probably sets up your next Gartley buy pattern. And that would look like this. I'll go ahead and color that in on the screen here for you. And that Gartley buy pattern, that would be the better spot to buy from. That's going to take you down into about that 0.618 retracement level, right around. Now let me just clean up my screen here, get rid of the formation tool here, and let's actually change the color. So this would be an ideal buy for you. Is if it gets down into the price here, it would be about $3.60. So right around 3.58 to 3.61. That would set up a nice little Gartley buy pattern. That would be a normal retracement of that move getting into that 0.618 level. You've got real nice Fibonacci numbers coming together there. So if you want to take a stab at it, $3.90 or so would be the area. Or if you want to wait for the larger trend buy, it's right around $3.58 to 60 cents. All right, my friend?
I'll be patient. Thank you.
Oh, you betcha. Thanks so much for calling. Right now, folks, we've got the Dow's up 34 points, S&P down 2, composite off 11, and could be nasty out here if all that we saw this morning in the futures was only that dead cat bounce. As we take a look at that 30-minute futures chart here, right now we've got prices moving up against the most recent bullish positions out here. You had that Morningstar that we were taking a look at, so support on that says is 1627. You had the bullish engulfing candle from 7 o'clock last night. That took you, says that support is really going to be the low at 415, out at 1626.25 out there. So that is the area that is being tested. Again, the more likely outcome here is a move into the 1607 to 1621 level if, in fact, this area gets broken. That area, again, being the 1626.25 range, and that is on the ES Mini that we're taking a look at. So we're looking at where the bulls and the bears are hanging out. Now, that A to B equals CD pattern up, that Gartley sell pattern that we first looked at, that no longer is a viable candidate because of the open here, because of the pullback during this 9:30 to 10 o'clock session. So that, waiting for that potential Gartley sell pattern, that is no longer out here. That would now have to recreate during the trading session of today, this afternoon, this evening, maybe early night before we would see that pattern actually take place out here. Let's take a look at gold and silver out here. Let's go take a look at gold. Gold is trading out right now at a price point of $13.91. Now, gold was having me become a believer, and that was on this trading session, of May 30th out here. We saw May 30th's bar close above the swing point candle from April 16th. That high was 1404.20. So far, that was a one-hit wonder out here. Gold immediately came back into that area on Friday. It's back inside that swing point, and so long as it is in that swing point goes from a low of 1321.50 up to a high of 1404.20. So long as gold travels with inside that says that it can set up that test for 1321.50. That's the patience bar out there. That's what you would love to see. You'd love to see, and simultaneously what we could see occurring out here, you'd see gold get down, test 1321.50, do it on light volume. And at the same time that takes place, you'd probably also see silver go ahead and complete that larger long-term 0.786 Gartley buy pattern in the $17.35. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 62 right now. S&P is up 1 3/4. You know, Friday we had a confirmed change in trend in my books to the downside out here. What we should expect today, you've got a better than 60%. Well, you got a 60% chance, not a better. You have a 60% chance that today ends up being a higher close. How much higher? That I don't know, but I do know in taking a look back and taking a look at days when we've had an increase in the VIX percentage-wise of greater than 10%, and I've studied them all. You have a 60% chance of a higher close today. So don't be fooled by any higher close, no matter how much that is. We've seen the Bears have truly they took charge of the ball. What was it, May 22nd out there when the Bulls really fumbled it. We saw the McClellan oscillator dip below zero out there. We saw a key reversal session. So that's really what's going on inside the marketplace. We looked at gold and silver. Let's finish this off by taking a look at light sweet crude here. Right now I've got the 30-minute chart on my screen here. That green squiggly 200-period exponential moving average has acted as a resistance level. We can see that as light sweet crude bounced this morning, got up to a high here at 7:30 at about 93.19. That 200-period exponential moving average has held it. And we also, as a resistance level, you can also see on the 30-minute chart here, getting up into that overbought territory as it made that move. Now, that is the 30-minute chart. If we go take a look here at the daily chart, what we're going to see here is we're going to see that on Friday, light sweet crude broke through the hammer candles. 2 hammers out here. Yeah, the first hammer candle show up on May the 15th. That low was 92.40. Your second hammer candle was down at a low of 92.21. That was on May 23rd. That area was tested and rejected on Thursday, May 30th. On Friday, you saw a close below it. In the overnight trading session, we saw light sweet crude move down to a level of 91.26. What was it doing there, and why did it stop? Well, number one, it was making a 1.272 expansion. Take a look at this expansion. That's off of that hammer low right here from May 23rd up to the high that was put in on May 28th out at 95.92. The expansion of those 2 swing points was 1.272. That is what stopped gold in its place. Not gold, but light sweet crude in its place. That's an area where people would then lighten up their load, get onto the elevator, what have you. I think that light sweet crude, having broken those hammer candles here, really says it wants to get down into the 88, 89 level, maybe come all the way back to 86. Of course, if it can camp out in the $89 area for a while, then breaks that because that would be the 0.786 Gartley buy pattern. If it fails there, that'll turn into a butterfly pattern. We take a look at bonds here right now. The 30-year Treasury is flirting with a support line. That support line really being down here right around the level of 140.23 out here. That should hold as a pretty decent support. And if the market is changing trend, ordinarily you would think that bonds might move to the upside. But you got to trade things. You got to trade things one chart at a time out there. At least that's in my opinion. If we go back and what do we want to take a look at here? We'll go back to the ES Mini here while we've got about another 30 seconds and see, candle-wise, really nothing here that has formed. Certainly nothing bullish, but nothing bearish right now. It's just simply going after the support levels here that were created by that bullish engulfing candle and that morning star. So at the moment, that area has still held. Hey, folks, one thing? I was surfing at the TFNN site this morning. I saw that still up there was the Tiger Dollar promotion. So that's going to be coming down quick. If you didn't get a chance, if you procrastinated, go over to the homepage at TFNN.com and take advantage of our Tiger Dollar promotion. You get a 20% bonus on your money out there. Have a great Monday, folks. Look forward to seeing you in a few or seeing you tomorrow morning. Take care, folks.
Let me tell you something, folks. I had people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.